Hello.
We're live. Okay, thank you. Okay, we'll get started. Good evening, everyone. I call to order the meeting of the MBTA Finance Committee for October 17th, 2024. We do not yet have a quorum, so we will go to discussion of information items. Mr. Longy.
Thank you, Mayor Rochelle. We'll start with item 5. Deb, would you like to do it, or? I'll do it since you're running the technology as well. The portfolio continues to perform well. We are continuing to exercise a strategy of buying investments in the 3 and further out down the maturity between the 3 and 5 year range, locking in the higher yields that are available now as we wait for the Federal Reserve to continue its projected trajectory of lowering interest rates. We have seen in the last couple of weeks a jump in the very short-term rates that go against what the Fed has done. And that has given us a couple of buying opportunities to lock in 4+% interest rates out to the 3 year horizon. We are currently holding a large amount of liquid cash because, again, the market, I think, is waiting for further economic information. And we can actually earn 5% on daily liquidity money now. So we currently have a much higher daily liquidity position. As we see that start to change, and we have the Bloomberg terminal, so we can see it pretty quickly. When we get the sense that that's changing, we will move that money out into longer maturity investments as well. So as we had talked about last month, by taking the strategy, as the market declines over time, it will go down. At some point, it will hit what's called the trough, that space in between 2 high waves. And we hope to ride the return on the portfolio at a relatively high level until this market starts to come up again. Markets going down and coming up is something that they do, although they hadn't done over the last decade because rates were held artificially low. And when it comes back up, we will take the opportunity to capture those opportunities as well. So it would give the authority a sustained, even level of return on the investment portfolio.
Okay. Let's go back to number 2. Thank you, Mr. Longy. We now have a quorum, so we will go to approval of the September 12th, 2024 draft meeting summary minutes. Do we have any changes or additions to the minutes? Do we have a motion to approve?
Second.
Thank you. All in favor? Opposed, abstained, motion carries. Thank you. Next, we have acceptance of the FY24 audited financial statements and compliance reports. Mr. Long.
Thank you, Mayor Rochelle. I will note that Tyler Farnsworth is on remote with us. Tyler was the audit manager this year. He has been the audit manager, I think, for a couple of years now. What I will do is go through some of the staff report. I have a PowerPoint presentation for you, and then I'll turn it over to Tyler to make concluding remarks on the audit.
Welcome, Mr. Farnsworth.
Thank you.
We did blue sheet this item because a couple of documents came in during the holiday on Monday. While we were on holiday, apparently the auditors were still working. So we missed the 3-day period to not have to blue sheet those. Those are at the end of the staff report. The Finance Committee is the authority's audit committee. And we have to follow government auditing standards issued by the Comptroller of the General of the United States, as well as standards set by the Auditor of Public Accounts for the Commonwealth. We've contracted with PB Mears to complete an independent external audit. This is for fiscal year 2024. And I'll let Mr. Farnsworth talk about the opinion. But I'd like to go to the PowerPoint. That will bring up on the screen. Because the audit as a document stretches to 100 pages, we didn't print it for you, but it's available by link. And I know everybody's disappointed, and because it is such an exciting document. And so if we had actually put it in front of you, I know the authority meeting would run late because nobody would be able to give up the read.
I hope you could.
But we have done a couple things different this year, and I do want to bring your attention to them. The first thing is we're focusing the narrative portion of the audit on a slightly different perspective. Previously, we used the same narrative boilerplate, which basically discussed how the authority started in 2002. Then, of course, HB 2313 coming around in 2013. What we've added into the narrative this year is talking about specific projects. And we're doing that to obviously show the value to the reader of the financial statements, as well as somewhat as a protective approach. So one of the things we mentioned this year, we typically in the past had not mentioned projects. But of course, when you're putting $500 million in a BRT system, and you've invested another $2 million in studying BRT across the region, there's notations on that in some detail as far as what the BRT study is hoping to provide. So again, just absolutely more excitement for the document itself. We also note the use of funds. The statement of net position, which is the government version of a corporate balance sheet, shows that we have $1.9 billion on the balance sheet. But we're also pointing out that 1.8 billion of that is our assets already assigned to projects. So it tells you the commitment level of that balance sheet to transportation projects. I also want to note that for FY24, project reimbursements were 138 million, which was up 20 million from the prior year, but 10 million below our 2020 peak of 148 million. And, you know, this is fiscal 25 that we're in now, and the authority gave us clear instructions to start looking at project delivery. And we have several initiatives going on this year to do just that. Essentially, though, we have to get past the point where our reimbursements currently are running between 1/3 and 1/2 of our revenue per year. So that's the number we need to improve.
Chair, would you like questions at the end?
Yes, ma'am.
Okay. At the end,
I'm sorry.
would you like me to wait till the end to ask questions, or can I ask them
No,
now?
please feel free.
I just want to make sure I understood, Mr. Lungi, what you said. That so we have 1.9 billion in assets, and we basically have 1.8 billion that's already spoken for in plain language.
Exactly.
Okay.
And we're gonna bolster that point even further. On revenues overall, the authority ended the fiscal year with a positive revenue variance, which is by design. We actually closed that variance a little bit, which is also by design, because if we let the variance become too big, that's money that basically didn't get programmed. In any event, any revenue, that variance rolls over into the next 2-year funding program update. We actually set out, and you have in front of you this schedule. Everybody grabs the reader. We put this schedule in several years ago, and basically what it does is it shows every project the authority has ever appropriated money on, how much of that money has been invoiced or reimbursed, and what the remaining balance is. Then it gives some project information as well. So this shows, if looking at the very bottom line, the authority has appropriated just under $2 billion, has reimbursed 900 million, So we have $1.1 billion still to be reimbursed. That was fun when we introduced it a couple of years ago, and we did it again to show that we are an organization with a tremendous balance sheet, but that balance sheet is going into all of these transportation projects. This year, because we are doing 2-year updates to the 6-year program, we added another schedule, which is the short one. Okay. This schedule shows the projects, broken out by jurisdiction, the year the project was adopted, and the total approved funding. Now, obviously, coincidentally, the first project on the list is $650,000 for the WNOD trail that we canceled, but we canceled it in fiscal 25. We didn't cancel it in fiscal 24. That shows 1.8 billion in future commitments. You would not otherwise find that number in the financial statements, at least not as easily as we're putting it out here. I'll also call this the red line chart. Were we to have an interruption in revenue, okay, this is the chart you'd have to take your red pencil to.
Because these are things that have been approved, but are still not funded yet.
Yes.
Okay,
Well, they're not appropriated yet.
not appropriated yet. Yeah. Okay.
So again, trying to set the example that, while we have a lot of money, we have a lot of money with a purpose. That purpose is broken down into a very granular level.
When it comes to redlining, what would be the process? Would they go through a similar process to when they were selected?
We would come to the authority and ask, how do you want us to pick the victims or recommend the victims? But ultimately, the authority would be tasked with having to make those decisions.
Okay.
So moving to the line chart on revenue, Deb. So this chart, of course, all of this is really interesting. I'm just picking out the most interesting stuff. But you need to read a whole 100 pages to get all of the things. I'd like you to look at the bottom line on this graphic. It shows up as gray. I know it's very hard to read on screen and a little hard to read on the handout. That gray line is the 30% funds over from fiscal 14 through fiscal 26. The next line up, the reddish orangey line, is the 70% funds for the same period. But you would think if you're taking the same dollar and you're splitting it between 30 and 70, why does the 70 jump up higher than the 30? It should run along the same path. And it doesn't for one reason. The investment portfolio. The investment portfolio adds to the income for the regional revenue fund. So again, what that change in trajectory, which really becomes steep in 21, 22, is the benefit of having the investment portfolio. And I will admit the investment portfolio is the authority's example of making lemonade out of lemons. We'd love for that money to be, in concrete, in buses, in BRT, et cetera. But until it is, we're going to manage it well and increase our overall revenue available to the authority. Sales tax showed strong year-to-year comparison. The interstate operation and enhancement program transfer, which is estimated by VDOT.
That's the I-95 money, basically, I-85 money.
Essentially.
Okay.
What started off as that, but yeah, is lagging. And the grantor's tax, as you know from your own jurisdictions, is really taking some hits. A little recap on the investment portfolio. The investment portfolio earnings for fiscal 24 were projected at 35 million. At the time, Deb was thinking I was putting too much pressure on her, I think, to make a number. She actually brought in 66 million, exceeding projections by 35 million.
Kudos.
And some of that obviously is the market, but also some of it is the management of the portfolio. That strong portfolio earnings more than offset the problems that were experienced with the IOEP as well as grantor's tax. I want to go into, and I do this pretty much every other year, or maybe every year. There was an additional unrealized gain of 24.3 million on the portfolio. So if you were to look at the financial statements, it would show the investments earnings as being closer to 90 million, not 66. That is because of a audit requirement called mark to market. And what that does is it takes your portfolio and values it as of June 30th. But you would only get that value if you sold it on June 30th, which of course, the whole thing at once, which of course we wouldn't do. So as we've noted in the past, the unrealized gain is a valuation. It's not spendable in real terms. Likewise, as I've said in the past, when we had an unrealized loss, it's not a loss that you incurred at your checkbook. It's a loss that you incurred as a valuation. So the bad news is you can't spend the unrealized gain. You can't spend that 24 million.
That's the term, unrealized
gain. But likewise, you don't have to start reaching for the aspirin bottle when you have an unrealized loss. Neither of those numbers go into the PAYGO calculation. And finally, I'll wrap up with the lease. I think Peggy is trying to figure out how to make lease a 4-letter word because it caused a lot of complications for her this year. A lot of disclosures for fiscal 24. We had transactions related to the move that started in 24 with our departure from 3440 Williams. Then going into a no-cost location for a couple of months here at Park Tower. And then we finally moved to the 6th floor, which occurred in fiscal 25. Of note for the lease are some declared subsequent events. And I bring this up because we seldom have subsequent events. Quite frankly, I was a little excited when we had a subsequent event because everybody else has them, but we don't get them. And that was, we made a $38,500 deposit, advance rent deposit. I think the landlord wanted to make sure we were actually going to show up. And that was a disbursement made in 24 that was actually used in 25. Additionally, in 25, we received $892,008 in cash as the final rent concession. Okay. And that's in addition to the landlord providing $1,068,000 in tenant improvements. I have to note, look around, see the beauty. Yeah. That money's largely gone. Okay. All right. We're reviewing the expenditures with the landlord and the construction stuff. But we are on track in accordance with the term sheet that the authority approved back in September 23. So basically a year ago. We are very much on the glide path. We will be chipping into that 892,000, but we expect to leave most of that 800,000+ intact, and we'll come back to the committee with recommendations for that. And again, we'll do full disclosure on those very large numbers, beneficial numbers of the lease. I will just kind of wrap up the lease statement in saying that while we cash flowed some expenses from the operating budget for the lease changes, the office build out, none of those expenses are going to hit permanently on the operating budget. So your operating budget is making no expenses for all these facilities. We're doing it all underneath the landlord's concession and expect to actually end up still with about $800,000 that you can decide what to do. We'll have recommendations. With that, I'd like to turn it over to Mr. Farnsworth from PB Mayors?
Can I ask questions first? Okay. And again, I'm just making sure I know what I'm looking at. So then pages are not numbered, but I'm going back to the subject of schedule of change in the restricted funding. So are we saying that between Metro and DRE, we have appropriated $1,994,499? Is that
No,
correct?
I'm sorry, that's just we just took a snapshot at the bottom of the report. The full report is here. That 1.99 billion is all of these projects.
Okay, so then it's 23 million for Metro.
Well, Metro has two direct projects at 23 million.
Yeah.
There's a lot of Metro projects that were actually applied for and received through a county or city.
Okay, but what we've done is 22.4 to Metro directly.
Direct,
Okay. And then
but that's a small fraction of what's actually been paid for
for
Metro.
Metro, can I get that number, please? To look at some point, the actual number paid for Metro. I say at some point, I think maybe before tomorrow morning.
Well, I think we have it on information Abigail has.
Okay, all right. And then on the revenue outlook discussion. Is the issue with the grantor's tax, that houses are not selling as fast as we thought, and so the grantor's tax is not meeting what we thought because people are not selling their homes? Is that the issue?
Correct. Grantors needs two things to both move in a positive direction to get a really good positive result. You need increasing values of property and you need transactions.
Yeah.
So currently what we're seeing is values are staying up or even increasing,
People
but
not
there's
selling their
just not
homes.
enough transactions.
Okay. And then the I-85 money, what's it actually called? What's the appropriate name for the I-85 money?
The Interstate Operation and Enhancement Program transfer,
Okay, we're not seeing that money coming as we thought it would either, correct?
as the Commonwealth told us.
As the Commonwealth told it, but we never have seen that money coming as the Commonwealth told us it would. It's never met the.
No, it hasn't.
So then. In another discussion, are we basically realizing that the way we were going to get money returned to us from what happened in 2018 will never really get returned to us because that I-85 money is never going to come to fruition?
It's not met its projections yet. And I have no ability to make a projection.
Sure, of course not. Yeah, of course not. Yeah. All right.
I'll also note that part of the recovery was a $20 million transfer, which does come as 20 million, but it's not worth as much as it was when it first started due to inflation.
Okay.
And it's a flat 20 million, it
It's
doesn't.
not adjusted for inflation. Okay. All right. Thank you. Thank you, Madam Chair.
The BRT number is also very helpful, and that is 500 million total.
Yes,
500 million total. Okay. I did write that down.
and most of that is on Fairfax County Route 1 BRT. But
Okay. Yeah, thank you.
But we've spent more than any other entity. Is that?
I believe we certainly within Northern Virginia have invested more than the Commonwealth in BRT.
Okay.
Wow. Okay. Yeah, that's something to feel good about.
Well, or not.
Well, yeah,
Yeah.
good for Northern Virginia. Qualified stuff. I don't have any more questions either.
Okay, so well, if you can turn it over to Mr. Farnsworth again.
All right, thank you all. So there's not much that I need to highlight from the financials because Mike has already kind of done all the big things with the lease and the investment portfolio. The thing that I will highlight in the financials, the auditors, we have two opinions. One towards the beginning, that's the opinion on the financial statements, and we believe we had an unmodified opinion, which is the best opinion we can issue, which means we believe the financial statements are fairly presented in accordance with accounting standards. And then at the very end, we have another opinion on internal controls over financial reporting and compliance, and we had no findings to report there. So we had two clean opinions. And so now we'll talk on the slides here. This is our required communication that's required to the board. I'm not going to read it all to bore you. It's a bunch of accounting, auditing standards. But I will highlight a few things, like this slide just discusses our responsibility as the auditors and some of the overview of the planning and scope of the audit. But if we can go to the next slide. So this is talking about, there were adopted new GASB statements this year, but they were not significant and had little to no impact on the authority. So it was nice that we had a year where we didn't have to have a big accounting standard that we had to implement. There was no significant unusual transactions. We had no audit adjustments, no uncorrected misstatements. We can go to the next slide. No disagreements with management, no significant issues discussed with management. Everything went really well. And, everybody there with Peggy and Mike and Dev and everybody there that we've talked to, it's a great relationship. And I think everybody's very helpful with getting us audit requests. We can go to the next slide. Yeah, this just discusses our PMA's responsibility and the authority's responsibility when it comes to the audit. And I don't think I need to point out anything there in particular. So we did issue, which I'll talk about at the end, a management letter. And so this slide is our significant estimates that we have to disclose to you all. And as Mike already talked about it, the investments, it's kind of that unrealized, the mark to market amount. So there's assumptions that go into that amount, and change in assumption can change that number greatly, or change in the market can change that number greatly. So we're just supposed to disclose that to you all. And then the same with the leases, the present value of future lease payments, that's an estimate, which is how you record the lease liability. And so change in an assumption could impact that. But we audited all the inputs and we feel comfortable that management calculated everything correctly with that. And so then I think the next item was the management letter. So we had a management letter this year. We didn't report any findings or anything in this. It's more informational. So the first item there, the auditor of public accounts had a new requirement for us to look at, and that is that regarding the Virginia Security for Public Deposits Act, and it requires the authority and any political subdivision to now go in on a quarterly basis and verify that the cash accounts are held in a public depository account. It's just a state requirement now. Nothing really changes there. Just you have to verify that that's being done now. So any town or county also has to do that. And then the other items are new GASB pronouncements. There's 3 of them on here. The first couple, compensated absences, that's not going to really have a big impact, or the certain risk disclosures is not going to have a big impact. But the financial reporting model improvements, that may have kind of an impact on how the financial statements look. So that's a few years out, but just wanted to point out that there are new GASB pronouncements, and I know staff is already aware of that. And I'm sure as we get closer to June 30th, 2026, we'll be doing a lot of trainings and figuring out what changes there's going to be. So that's really all I have to discuss, unless anybody has any questions.
I do. Thank you. So I have 2 questions. One, when you say the authority and all and political subdivisions have to report, is that you say every quarter?
Yep, every quarter.
That's insane. What happens? Is there any negative consequences to the authority of one of the political subdivisions we work with don't report?
No.
Okay. And then tell me one more time why we don't have to do anything with GASB yet. With
the new GASB standard?
Yes.
That that's a pending GASB pronouncement, so it's not effective until June 30th, 2026.
I thought it started.
They,
Okay.
they give us a lot of lead time to get ready.
Okay,
for
all right.
those
I
things.
thought it already, okay, well, that's a good answer. All right, thank you.
No, I'll add, Chair Randall, we actually, as a matter of protocol, have already been checking to make sure those cash deposits are covered by the statute.
Worried about us. Never worried about us.
It's just for Virginia treasurers, it's just a good practice.
Yeah. Okay.
Mr. Snyder, do you have any questions?
Just a question for the outside auditor. Is there anything that you ought to be aware of that Alan mentioned?
Excuse me, I didn't catch the end of that question.
My question was, do you have any guidance or anything we should be aware of that you've not already gone over?
No, I don't think so. I mean, everything, with authority runs pretty smoothly. There's, it's kind of a smaller finance accounting staff, but everything is like triple checked. So when you have more eyes on transactions, every transaction has a couple different people review it. And so that's always, good. And that's what we want to see.
Okay, good. Thank you.
Many
Thank you.
thanks to staff, finance staff for working so closely and so well with Mr. Farnsworth. Wonderful product. Wonderful. Thank you. This is an action item. Do we have a motion?
I will make, I recommend authority acceptance of the FY 2024 audit.
Sorry.
Okay, all in favor?
Aye.
Opposed, abstained, motion carries. Thank you very much. Okay, moving on to number 4, Mr. Longy, 2026 budget guidance discussions.
Thank you, Mayor Rochelle. This is an October event for us. We go over the budget guidance as we start to prepare the authority's 3 budgets. The first one I'll mention is the local distribution fund budget, we're 30%. As you know, this is largely driven by the code. We get $1 from the Commonwealth, we take 30 cents of it, we send it to the localities based proportionately on where the transactions occur. We do keep wording in this budget that we will make the distributions according to law. And that keeps us from having to come back if there's any variance in the estimates or anything like that, so that we don't have to keep coming back and doing budget adjustments. The regional revenue fund budget, again, this is the source for project funding. We do these estimates on a 2-year basis now, getting ready for the 2-year update to the 6-year program. We just note that we'll keep moving the budget through on that allocation. The biggest expenditure on it is projects that localities or project sponsors tell us that they're going to be executing that fiscal year or needing appropriation from that fiscal year. It also covers, we have a fairly complex calculation that we do for forward appropriations to make sure, as we've mentioned in the past, that we don't get outside of our cash flow or our revenue stream. The regional revenue fund budget has also funded the operation budget since the legislation was changed to allow that to occur. It's a relatively small amount that comes out of the regional revenue fund. The operating budget we've proposed to present, as we have done in the past, basically a base budget with inflationary, contract, other escalations, and then any new initiatives for fiscal 26 would be outlined and have their own justifications and analysis attached to it. If you are okay doing that process, we will come back in November and January for further budget discussions where we start to talk about most of the initiatives for the operating budget. Hopefully February, we'll have this pretty much wrapped up, go to the authority in March or April, and have our fiscal 26 budget in place in time for fiscal 26.
Question. Is the MBTA in need of increased staffing?
We're analyzing that now. Quite frankly, I think the project delivery is something that we may need more resources for. And we are experiencing some transaction loads on the finance side.
Okay, thank you. So we should prepare for that. Okay, moving on to monthly revenue report.
The monthly revenue report, again, as we talked previously, grantors is a concern. We're too early in the fiscal year to make any pronouncements, but grantors is a concern. The IOEP is a concern. But sales tax seems to be doing very well and covering that up. Plus you have the investment portfolio. So I've got no concerns on the revenue estimates at this point.
Questions?
The only, Madam Chair, the only thing I'd be interested in is a running sort of total amount of revenue that's expected from, what is it, I-81 versus what we've actually got.
That would be interesting.
Like to look back and then make that an evergreen.
We'll have that analysis for you next month.
Thanks. That's the difference between what we were promised and what the state is actually.
Thank you. You have a follow-up?
And they've changed the formula a bit since the initial inception of the I-81 or Interstate Operations and Enhancement Program monies.
When they realized their revenue projections for the 81 corridor were overly optimistic in the extremes. So they transferred the liability to the Interstate Operations and Enhancement Program, which is basically a percentage of fund balance in that fund.
Oh, interesting.
Mhm.
Well, that's fuzzy math.
The fund balances are very fluid over the course of a fiscal year.
But they're not supposed to be used one time. The fund balance is, it's a one time, they're not supposed to be used for ongoing.
Well, they're talking about the actual balance in the account, not the excess balance, like your end of the year budget excess balance.
Okay, all right.
But it doesn't, my biggest concern about that legislation is it doesn't set a strike point in the legislation. So we can have a fund that can start off with $1, get up to $5 during the fiscal year, and then drop down to 75 cents. And if I was having to give somebody else a calculation based on that balance, I don't think I'd be doing it at the $5 level.
Okay. I got you.
But I don't know if that's going on.
Moving on to number 7.
Number 7, the monthly operating budget, again, very early in the fiscal year, but we've used 19% of the budget with 25% of the year, so we're on track. I will note we booked $65,000 in office transition expenses, which will ultimately be repaid through the lease concessions and stuff. And thus far, the operating fund, since we started applying its interest earnings to it, has earned $19,000 in investment, which will offset future draws on the regional revenue fund.
Ms. Backman, do you have an update?
Thank you, Madam Chair. I will be brief. I would just like to thank the finance team, but Peggy in particularly, for being the lead once again on the audit. I think, if my memory serves me correctly, we started right before the move here, Peggy. And then the move, and she was dealing with the audit and all things with the move, and the facility looks great, but anytime you move, there are things to be dealt with. So I do want to say thank you to the finance team.
Thank you, Ms. Backman. Thank you to staff. We very much appreciate everything that you do for the NBTA and for the members who attend the NBTA. Is there any other business to come before the committee?
Yeah.
Then we are adjourned. Thank you, everyone.
You guys are saying it's 500 million for VRT.